Two times now, we have called the top on Nvidia. Last time, we had this massive sell-off of about 30%. This time, it's so far been about a 15% drop. And of course, not all of my trades are profitable, only about 65%. And if you want to see all of the posts going over the exact callouts, tags, all of that, go watch yesterday's video. What I want this video to be is to go over in-depth market structure on Nvidia, talk about how this could have helped us when we could have gone long back here at $90. We're going to also go over why it was a perfect short opportunity at 129 with the same exact setup. And more importantly, we're going to be able to see where this is going to bounce most likely in the next couple of days. Now, the first thing that I want you guys to look at is we need to zoom out on our chart. This one is a daily chart. And this is whether you're an investor, a trader, whatever it is, you should understand structure and understand technical analysis. Because even if you believe Nvidia long-term, with me with Tesla long-term, it doesn't matter if buyers are not stepping in. You need Wall Street to move the stock higher for you. You cannot bid it up yourself. I can't bid it up myself. And we need big money to come in with us. This is why understanding structure and understanding accumulation and redistribution, which are two simple things, basically just means buying and selling, which we're going to explain in this video. Now, the first thing we need to do is take a horizontal draw tool, start marking off our lows. You're going to see that a low that has not been taken out as of recent is down here at 77.30. From here, the next low is down here at about $91.89. If we look at these lows, are they making higher lows or lower lows? The answer is obviously higher lows. So that is a good sign. We know, number one, now that this is a place that we could put a trend line. And this means that the trend is still bullish. Now, if we take another horizontal ray and we mark off our highs, one being up here, the second one being up here, and the third one being right here, you're going to notice what? That our highs are making lower highs. This is a sign of compression. Now, this is showing us that there's no longer, we're still in an uptrend, but we're not seeing higher highs. If we're seeing lower highs followed by higher highs, that's a very good sign. Instead, we're seeing a compression. Compressions occur when price is making lower highs into higher lows and we start to get a squeeze. So understand now that it looks like we'll probably just start bouncing between these levels from just a trend line perspective. But now that we understand what the overall structure is, we need to look at our Fibonacci retracements. So if we take a Fibonacci retracement from swing low down at 76.14 all the way up to swing highs of all-time highs back here at about $140, you're going to notice that the golden pocket level, which is the 0.618 to the 0.786, was the perfect area to bounce at. This golden pocket area is what I call the institutional buying zone. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description. This is because this is when the algorithms are allowed to turn on. The golden pocket, the Fibonacci, they're very, honestly, like dumb ways to say that if we were to look at this breakout, at this swing low to swing high, that 0.618 is basically a 61% pullback. Now, not 61% on the actual stock, obviously that's 28%. But what it means is that this is a 68% pullback of just this move that we have isolated. And normally within structure, when price pulls back to the 0.618 or 61% down to the 0.78 or 78%, this is normally such a discounted range that this is when they start to buy from an algorithmic standpoint. So think about it. If you had the ability to buy a t-shirt for $100 all the way back up here, and now you get to buy it for 78% off, so basically $22, I think that's the math, I have no idea, $22, you would buy it. And so that's why in most cases we will bounce within this institutional zone. Now there is another zone that I like to call the smart money zone, which is the level below the 0.786, between that and the 0.826. The 0.826 is called our optimal trade entry. And the area between this is called the smart money zone. This is normally the max pain or the lowest that price will drop through before we get that bounce, which is why it's called the optimal trade entry. So as price was pulling back into this level, you know that we were saying this is a great time to go long. And for those of you who are in our academy or taking our free courses, you know that this area also lines up with our weekly market bias, which is one of the strongest support levels that we have within the market. So now that we see this bounce, we want to notice if price is going to reject at this level. The way that we can do that, basically the way we can find the top, is by taking our Fibonacci retracement again. But this time, instead of isolating the swing low to the swing high, we're going to isolate the swing high to now the most recent swing low. If we pull this out, you're going to notice that the golden pocket, the area of institutional selling in this instance now, is sitting right up here between $122 and $130. You'll notice, ironically, that you have this level right here called the smart money level. The smart money zone is usually the last level before we get a sell-off. And the worst part about this, and I've been doing this for 9 years, I've no problem being honest with you guys, you remember that we were shorting within the institutional sell zone, and I actually got stopped out of this position. My puts would be on fire right now, but I didn't hold them. So from this point now, while we're making lower highs, higher lows, where are we most likely going to bounce? Well, the first thing to do now at this point is take our fib from not all the way back here, but most recent swing low to most recent swing high. If we isolate these levels, you're going to notice that the golden pocket level is sitting right here between 106 and about $100. This is the area that we are expecting a bounce at, with an absolute worst case level down here of about $98 to $100. I believe that there's about a 70 to 80% chance that we will bounce at this level. If that does not occur, worst case scenario, what I'm expecting is to see one more sell-off down through this support to take out $88 and bounce from there. Now, why would I expect that? Well, if we remove this smaller time frame and we go all the way back to the bigger time frame from swing low to swing high, you're going to notice that, well, that smart money level was never taken out. Remember, we bounced inside of the golden pocket, but never came all the way down into that level. So there is still a chance that smart money gets their fill. And I think the absolute worst case and the area that I would be looking for a sniper long-term entry on Nvidia is right down here between $85 and $88. I think there's probably about a 60% chance that happens. I think we're probably going to find a support at 100 to 88. But if we start to move down to $87, $88, I'm going to be selling cash secure puts heavily. I'm going to be looking to enter a long-term position on this down there. And I think that that is the most optimal area for the next 12 to 24 months on Nvidia. Thank you guys for watching the video. If you want to trade alongside of me each and every single day, get access to all of my real-time alerts, private live streams, as well as a trading community of over 800 other traders using the same exact strategy that you see here each and every single day. If you want to join the team, you can use the link in the description to join the private mentorship group. If you don't feel like you're quite ready for that, then take advantage of all of the free courses that we have on our website. Thank you guys for all the support, and I'll see you next time.